Guys, welcome to my channel. So today's video is going to be about how I use liquidity to go in my favor. So today I missed a beautiful trade, and the funny thing about that is that I called it step by step. This whole move I called it step by step, and I posted it all on my trading view and said exactly how it was going to play out. Let me just take a quick look and show you. So I wake up and this is my first post, my higher time frame targets. So obviously, I'm looking and I'm saying, where do I think price is likely to go and at least wick into or take some sort of liquidity from? It's going to be there on the left, right? So that's my higher time frame target. Now my first post after that was to go long. I had a bearish setup too, but it worked out going long exactly how I said. To successfully enter a long position, it is essential to meet the following criteria. 1, there must be clear evidence of liquidity being absorbed from buyers. Literally meaning I just need some liquidity to get swept from where I think the buyers in this trend are putting their stop losses. So on these lows or below these lows. Then after that, I need a bullish momentum candle to follow straight after liquidity. So when I see the spikes or these lows be broken, I want to see a nice bullish momentum candle. Now take profit is where I said on the higher time frames. There's a video there, me reacting straight afterwards what happened, and a video of me actually breaking down the trade and talking about it. But that you can come and look for yourself if you want. The link is in my description. I call out my trades every day on TradingView. So I wish I kept the drawings on there, but I can redraw them as if I was doing it from scratch. So basically, looking for my higher time frames, boom. There's my TP1, and there's my TP2. So then I go down to my 5-minute time frame. Let's pull it back. So I was initially there, and this is where I drawed my liquidity out. So I'm thinking, this liquidity laying beneath this level, liquidity laying beneath this level. Every single time a high gets broken, then there's liquidity because people are buying to push this higher. So there's going to be stop losses below structure, I'm imagining so, right? So I'm waiting for these to get broken before I can even try and get into my position, because usually I just jump in there and be like, boom, momentum candle, and then I'd be the same as these guys and put my stop losses there and target my targets, and I'd always get stopped out like this. Boom. That's liquidity literally getting grabbed on the 5-minute time frame though, because on the 15-minute time frame there ain't even a break of structure. This is just a pullback. So 5-minute time frame I'm trading on. I'm looking for some liquidity to get grabbed, and then a momentum candle. More liquidity gets grabbed. Oh, there we go. That's the perfect liquidity spike there. So it comes down, stops people out, and then it comes back up, showing us that like price doesn't want to keep going down. And then what happens? This. I went to turn the kettle on and make a cup of tea, and I came back to this. Missed the whole move. Let me tell you how I could have caught that move though, and how I would have caught that move. Because when I'm in my area of interest, I'm scaling down to the 1 minute and looking for my engulfing candle, which is there. Boom. I would have put my stop loss below these wicks and targeted. And boom. The rest is history. And it's still going now. So these setups happen every day, if not every other day. That's why I'm not worried. So let me just quickly teach you how to use it. So say we're in an uptrend, right? Just in a clear uptrend. Now you need to look and think, where are people putting their stop losses to? Imagine you're buying in. I don't know, I'm buying in there. No, I'm buying in there because I've just broke this level. I buy in there on this candle close because it's a pretty bullish candle, but my stop loss is there. So I want to see people's stops get hit. It didn't happen. Cool. We're still going. We need a pullback now. Boom. We get this pullback. So now I need... Boom. All right, so cool. This high gets broken. Where are people putting their stop losses if they buy in on this big candle? Just imagine it. You'd have to put your stop losses like there, wouldn't you? Or there. You see what just happened? Stop loss is there. Wick, boom, comes and takes out the stop loss. Momentum back up inside. Now put your stops there and target the high or the next structure or whatever. Do you get me? Instead of becoming the liquidity, like you just literally waited for people to get liquidated and then entered on the momentum candle. It happens everywhere. Look, everywhere. Look at these examples of liquidity, right? It happens all the time. Downtrend starts. Boom. All of this, I'm going to be putting my liquidity at, right? So first would be there. When it's there, it doesn't get swept. There, doesn't get swept. You just keep moving it down until that gets swept out. So now this low comes, breaking all this. Boom. So you're putting your stops literally there, people are. And then this is happening. Boom. It's coming out. It's breaking. It's taking their stop losses. And then it's dropping dramatically. You're getting on them momentum candles back in the trend. That's all you're doing. You see what I'm saying? It happened again there. Another perfect example I can see. Just drag your line down and think, I'm waiting for this line to be wicked out. Boom. Bodies of the candles. Gets wicked. Momentum candle drops. Gets closed outside off, but then instantly momentum candle back inside drops. It happens all the time. When your eyes are open to it, you're just going to keep seeing it. Another one. This price pushes down. You go, right. Boom. Oh shit, that's big. Let me get in. Let me put my stops like there. And then, boom. It gets wicked. People's stop losses get wicked. This is where you get in. When people get wicked and you see momentum candle coming back in, then you get in. Then you target the lows and previous structure, etc. And yeah, that's basically how I trade liquidity anyway. That's a quick lesson on it. I missed an opportunity today catching this whole move after calling it. Made me feel some kind of way, so I thought, how can I make a positive out of this negative? And this is how I did it, by teaching you how I trade liquidity. So hope you enjoyed the video and you took something from it. And I'll see you on the next video.